Hi, I'm Chris Carlson. In today's video, we're going to discuss the 6 steps on how to sell your company to a private equity firm. This video is very helpful if you're looking to find a private equity firm to acquire your business. This is what I've learned in 30 years of selling privately held companies to private equity and working for private equity to acquire privately held companies. Step 1, understanding what private equity is and isn't. Very simply, private equity pools capital, can be from pension funds to high net individuals, to acquire privately held companies. They typically acquire controlling interest with the goal of growing the business and selling it within 3 to 5 years at a profit. There are over 6,000 private equity firms in the world. Of that, about 10%, or roughly 600, operate in the lower middle market. The lower middle market are companies that sell for $5 million to $100 million. Today's video is working with those types of firms. That's what I've done for 30 years. Step 2, how do you find a private equity firm to buy your company? There's a couple resources you can use. One is Private Equity Info. On Private Equity Info, you can sort through thousands of private equity firms and find the ones that have acquired businesses in your type of business, in your geography, in your size. You can get hundreds and hundreds out of that. An additional resource, which was even a better resource, is called PitchBook. There's also a link below for that. In PitchBook, you'll be able to find not only companies who've bought companies like yours, but you can also dive into the companies they've bought, what they've done, the funds they've raised, detailed information on all the people that work at the firms. It's a fantastic resource. There's a link below to it. So between PitchBook and Private Equity Info, you can find hundreds and hundreds of companies that would be interested in acquiring your business. A couple words of caution. After you find these hundreds and hundreds of companies that want to buy your business or expressed interest in buying your business, you need to sort through them. There's 2 major types of private equity firms. One are called search firms. They do exactly what they say. They search for a company to buy and then they raise the money. Now contrast that with a firm that first raises the capital and then finds the business to buy. To complicate matters, there's a lot of kind of hybrids in there. These are the 2 major types. Within the lower middle market, that is companies that sell for the $5 million to $100 million, there's many search firms. Now, search firms can be great. You just need to know that you're working with one. Remember, someone saying they've got committed capital is not the same thing as having the money in a fund. Committed capital could be they have a verbal from a high net individual who says if they find the right deal, they might be interested in investing with them. Now contrast that with someone that has $100 million that they can disperse at their own will. The 2 offers are very different. So a lot of what investment bankers do are understand who has the money and how it gets dispersed and where the money is from and how it works. So remember, someone saying they have committed capital is not the same thing as having the money. Step 3, assessing the value of your company. While we wouldn't recommend bringing your business to market with a price tag on it, it is important to understand about what it's worth, a range of values. If your value range is higher than what most private equity firms are going to pay, it might be best to hold on to the company, harvest the money, and sell at a later date. So a couple resources are available for you to find out the valuation of your company. First of all, you need to recast your financials, and we're going to have an upcoming video that's going to give you a spreadsheet and a template on how to do that. It's fairly simple. So you need to recast your financials to understand the true kind of cash flow that would be available to a new buyer. And secondly, you really need to highlight and detail your specific things that make your company unique. What is your value proposition? What do you have? A special location, special product or service, or something that's unique about it? So you have both the narrative side of it, like what makes you special, and then the financial side. You put those 2 together, and then you can go to a resource called Business Valuation Resources, and they can show you comparable held companies. You can search through their databases. They collect data from investment banks like us, and then you can sort through the data and you can find similar companies, similar size, similar service areas, and not only see the valuation of the company and what it sold for, but almost more importantly, the terms that it sold for. So it's very good to understand all about the business, like what it's going to sell for, what are the terms, what are these people paid. You can sort through all that data on those resources. It's a fantastic resource. Step 4, preparing the company. This is a place you can actually increase the value of your company, and it's going to attract offers from larger, more well-funded buyers. So it's very important. It's the easiest, it's the low-hanging fruit. Probably the easiest thing you can do in preparing your company is work on the financials. It's fairly hard if you've owned the company for 30 or 40 years to really change all your employees, change your customers, or change what you do. But the financial reporting is fairly easy to upgrade. And we'd recommend if either doing that internally or with your CPA or really hiring a temp CFO to come in and do it. The kind of data that you need to run your company is much different than what a private equity firm needs. Private equity firms have asked us things in the past. They asked us once for SKU level P&Ls for the last 5 years. That's thousands of pages of data for our clients. So it's very important that you both have all this data ready to go, and you need it to be able to just have it available. Some companies, if you look at it, if they haven't done inventory in 3 years, it's really hard to figure out what the profit is. So it's very important that you have very good financial data. Hopefully you can go back and clean it up and prepare for it. In some cases, you're going to need to just wait and sell it once it's better. Step 5, the pitch. Private equity typically looks at around 400 deals to do one. And many times the only thing they look at is the pitch book to make a yes or no decision. So the pitch book is very important. The pitch book should be a combination of financial data. The narrative needs to cover your employees, very important, your customers, your vendors, your competitors, and how you do what you do. One of the documents that is going to be passed around to maybe 40 or 50 people you never get a chance to sell your company to. So this document is going to get circulated around, and in the document, a person should be able to read the pitch book, have a meeting with you and your managers, tour the business, review the financials, and put an offer on your table within a week. So these pitch books are all important. It shows the private equity firm that you understand these things. It shows them that you put effort into it. It shows them that you're serious about it. And it can get you in front of people who maybe wouldn't buy your company. A well-prepared pitch book can get a large firm interested in deals they typically wouldn't do. We've heard this before. It's the biggest compliment we could hear is, hey, we typically don't do deals as small, but this was so well-prepared and so easy that we're going to make an offer on it. So we want to hear that. They like well-prepared companies that have good pitch books. In the pitch book, we always say, put the good information in there 3 times, but you also need to put the bad things in there as well. If you know there's problems, get ahead of them. A typical private equity firm might spend $100,000 or $200,000 hiring CPAs, lawyers, and industry consultants to review your deals. So they're gonna likely find out if there's any problems. You want to get ahead of it. If you're gonna lose your biggest customer, there's a huge new competitor coming to town, you've got older equipment or the software needs to be upgraded, get out in front of it and tell it. We say, once again, tell the good news 3 times, tell the bad news at least once, you'll get a lot of credibility with them. Step 6. Negotiating the price. Funny enough, you think this is where the magic is? It's not. If you have done steps 1 through 5, negotiating the price is very easy. If you have scoured the world, and most M&A transactions now are worldwide, if you've scoured the planet for the best private equity firm, you've scoured the planet for the best family offer, you've scoured the planet for the best competitors to acquire you, you've looked at near competitors to buy you, found the best high net individuals. You have this great curated buyers list, which is by far almost one of the most important things to have. And you've provided them with orderly, well-prepared information when they need it. You're gonna have them competing with each other. And it's quite easy. At this point, what you have, you're negotiating the price, but it's an auction process. One's competing against the other. If your buyers are waiting more than a week or 2, or they're just having problems, steps 1 through 5 weren't done, and you really should start over at the beginning of preparing the business for sale. So negotiating the price, it's quite easy. So in conclusion, we'd recommend hiring an investment bank to do these things. We've told you about some of the resources that we use and how to find private equity firms. You can use them too, how to write pitch books. We also have many up and coming videos. We're gonna have videos that are gonna detail how to find family offices, videos on how to negotiate with your competitors to sell your business. We're gonna have videos coming up on recasting the financials, videos coming up on how to prepare for due diligence. So like and subscribe, and we've got a whole bunch more videos coming up to help you sell your business. Thank you.